Let's start off with the fact that we saw a 75 basis point cut in July, and that was pretty aggressive. So most people not really expecting move this time round. What are you looking out for at this MPC?
Thank you very much. As you point out, in July, we did see that fairly significant cut in the base lending rate. And we have seen since that time a response, a fairly mild response by many of the commercial banks, but we have quite happily seen rates fall. But the general consensus is that rates haven't fallen commensurate with a cut in the central bank lending rate. And really that will be the focus of this meeting. In the sense, analysts will be looking to see what the central bank's own view is about the effectiveness of their ability to control lending rates and access to credit within the economy. So I think you will find most people not looking to see another cut because that would be unexpectedly aggressive, but you will see people looking to see what is the tone of the central bank with regards to their efficiency in being able to impact rates within the economy.
Exactly. Well, looking at the credit extension lines, we've seen credit extension remaining relatively tepid, and also just keeping in mind that a lot of banks have come to the fore, started cutting their lending rates as well, but gross bank loans standing at around 828 billion shillings. That's 30 billion shillings more than what we saw in April, but also keeping in mind that it's not really filtering through to the real economy. How do you think this can actually be done? Do you think there needs to be more pressure from the central bank towards the banks to actually start making significant cuts on the interest rate environment?
I think it's a very good point. I think it's easy to forget the real economy in a discussion about interest rates and inflation. And I think I would agree with you that there is a need to look and see, are we being effective in attempting to modify the economic climate to enable and to foster new growth? I certainly don't think just deeper cuts are likely to be effective. I think there's a need to take a more holistic view of our economy, certainly focus a little more on the output side, because really the central bank has in its sense been focusing on demand and the ability to stimulate demand, but on its own without focusing on the output side and looking at other industries and to see how is the economy fundamentally growing, you could then create very new problems like demand-driven inflation. And I think at the same time, the fact that they have been not very effective at controlling interest rates coming down, it might be even more difficult when the interest rate begins to run away from people and inflation becomes a concern once again.
Well, Kingori, let's touch quickly on the shilling as well, because we have seen the central bank intervening quite extensively because they are concerned about the export market at this point in time. But that said, we have been seeing the shilling appreciating against a basket of major currencies, and then we see the central bank coming in and buying in some hard currency to cap those gains. How do you see that playing out? Because essentially a stronger currency means that you import less inflation.
I think generally when you think about the interest rates, when you think about exchange rates, when you think about local inflation, they're all linked. And all really I think as an economy we're looking for is stability. I think we appreciate as a smaller economy, we aren't exactly able to dictate the pace, but what we look for is stability. We aren't quite able to control the external forces that sometimes come and throw us off center, but we are looking for stability. I think the central bank can take quite a bit of credit for having been able to foster a more stable macroeconomic environment, and I don't think quite anybody expects them to be able to fully cap, for instance, a weaker shilling or to perhaps even drive it towards strength, but we are looking for stability. So I think going forward, and even in the tone of this meeting, we would want to see a central bank that speaks strongly about its ability to ensure that going forward, under whatever regime, there would be relative stability and people would be able to plan with sufficient certainty for the future.
Well, looking at the GDP numbers that are expected for this year, we're looking at around 4.5%. The people that are slightly more bullish talking about growth of 5.2%. But at the end of the day, it's really been driven by the agricultural sector, which accounts for around a quarter of Kenya's GDP. And also just keeping in mind that the power scenario is changing extensively. There are many risk factors when it comes to the agricultural sector, the weather being one of them. Give us your view in terms of how the central bank is going to start addressing the fact that perhaps Kenya needs to start diversifying its economy even further.
I couldn't agree more with you. I think our over-reliance on agriculture has exposed us many times in the past, and only at the moment we already see concerns about the upcoming rainy season with talk of the La Nina climatic effect likely to lead to less than optimum rainfall. I think we've received many warnings as a country, and really I think it is high time that we look to diversify. What I would not be so sure about is whether the central bank is best placed to be that instrument of diversification. What I think we lack and need to foster is a new political will focused on the economic challenges facing our country. And hopefully with a new constitution and a little more focus in our country and government, I think you will see that responsibility of diversifying the economy and ensuring, like I said, that we are concerned not just about demand, but about output and supply in the economy that would then lead to that fundamental growth in GDP numbers that would then sustain growth over the long term. So I think what we really would be waiting to see, if you want to look beyond the MPC meeting, is a political elite, a government that is more focused on the growth challenges for the economy into the next 3 or 4 years and less concerned about just being able to balance their budget in the short term.